Welcome to the Liquidity event. We're your hosts, Shane.
And I'm John, pinch hitting for AJ today.
We got a guest host in the seat today. Mr. John Owens is back. Last time we had him, I was somewhere in the desert.
The holidays over Christmas.
Finding myself. Yeah.
Yes. Did you find yourself?
Somewhere in the crevice between Christmas and New Year's. I did not find myself, unfortunately. Today we have a special episode. We're going to be talking about the state of tax season, the state of taxation in America, what taxpayers need to know about what's going on with the IRS, with their personal taxes, issues and road bumps, and all fun things regarding the IRS and taxation today. We're also going to be talking about our backgrounds in taxation, the IRS's budget, and how that impacts everyone listening to this, what it's like to work at the IRS. Ooh. That one's going to be
not
fun.
Speaking from personal experience.
No. What we can do to fix the IRS's issues, what issues BKFI specifically is experiencing with its clients and their tax returns, expectations for the rest of the year, and all this to say that there's just more evidence that boomers continue to rule the world. So today we're recording on February 23rd, 2022. We just went through 2022.
Tuesday.
Yeah. Which is
Taco
what?
Tuesday for that matter.
Did you get a margarita yesterday?
No, I didn't get a taco either. But I wrote the date down like 4 times.
Yeah. 2222 was an anagram, a pictogram, a palindrome, and a onomatopoeia?
I guess. I'm not sure about the onomatopoeia, but it's been a while since I've taken an English class.
Right on. How you been, John? What's going on with you, buddy? What have you been up to?
Yeah, not too much. This is a big year. I turned 30 this year, and so I've been working on my 30 bucket list. Like, what is the shit I need to do before I turn 30? That's within my control. Not necessarily getting my life in order, but like
the stock market.
Correct, like the stock market that's in my control, exactly. And so I'm planning a trip to Alaska. I'm trying to do that. So if any listeners have any tips, hit me up. But I'm trying to go to Alaska.
Yeah. Wow. The frontier state. The last frontier state.
The last frontier. Yeah. Plus, I figure, being closer to Russia's eastern flank is better than being closer to their western flank at the moment.
Too soon. They literally invaded Ukraine today.
Okay.
Wow.
Okay. Sorry.
Well, maybe you can invade on the backside while.
Maybe I'll be able to see Russia from my Airbnb. We'll see.
Are you going to see some grizzly bears? Are you going to pull a grizzly man?
I don't know. The problem with Alaska, the hard part about visiting Alaska is that it's so big. So you just spend so much time just literally getting around Alaska. So I'm trying to figure that out. Would love to see some grizzly bears. Would love to see some glaciers, some mountains, some water. I don't know. Maybe some salmon. I don't know.
Yeah. I hear it's got the highest percentage of pilots per capita due to the spread out nature. Yeah.
And because nobody lives there. Yeah.
So how long do you turn 30?
November. So I've got some time.
Oh, okay. So you got plenty of time.
You got plenty of time to do the shopping that you need to do, Shane.
Okay, right on. What are you reading, John?
So I'm not reading too much at the moment. It's the middle of tax season, so I don't do a good job of rolling up into a good book, but I have been listening to the Happiness Lab podcast quite a bit on my runs. I don't know if you've ever listened to that, Dr. Laurie Santos. Great podcast. Highly recommend.
On your runs, I forgot you are training for a half marathon.
Half marathon next month, so we'll see. My second one.
We've got a 5 a.m. riser in our midst here. What are you drinking today?
You can't talk. You and AJ are up at the crack of dawn as well. My Slack messages are blowing up by 5:30 Eastern.
That's what it takes, John. That's what it takes to be a pain in the ass on Slack.
What about you, Shane? What are you doing for fun?
I over the weekend I slipped into an Ozark binge sesh. For those of you that don't know, Ozark, the financial advisor gone cartel money launderer, is a great must-watch for all financial advisors and accountants in general. Jason Bateman plays a great. It's like a
Bateman fan.
Yeah, they essentially ripped off Breaking Bad, right? Because I never saw Breaking Bad, but I'm pretty sure the straight man goes bad, and
I think that's the whole point.
Funny.
Yeah,
right. So we're in our last season, and I ripped through that last season over the weekend, and then I watched the Kanye doc as well, which is for any Yeezy fans, even just tangential fans, it is very revealing. It's pretty cool.
His mind would be an interesting place to vacation, not a fun place to live.
No, not a fun place to live. All right. Why don't we hop into this? John, tell me about your, we're going to talk about taxes today. What is your background in taxation? Tell me about your experience before we get our
Yeah,
insight into what's
yeah.
going on.
Well, I'm currently the director of financial planning here at Brooklyn. If I head up the planning team, but so I do a lot of tax planning work, but I don't do a lot of tax prep work these days. Thankfully, to the because we got a skilled team that does that here. That Shane heads up on the tax side of the firm. But my background is I've worked in tax for quite a while. I worked at another financial planning firm where we did tax returns for our clients. So I headed up the tax team for there a couple seasons. I've done hundreds of returns, yeah, it's an area. It's a favorite area of mine because it mixes both the analytical part of financial planning and like public policy and like how the hell all this shit works, like literally how we fund our government and like the decisions that Congress makes, and it's kind of fascinating. So I'd say I'm a bit of a tax geek.
Yeah, you definitely are. I love getting into tax conversations with you for the same reasons that you just mentioned. Oh, my man's drinking a beer. I forgot. What kind of beer are we drinking today?
I have a New Trail Gearhead Hazy IPA here, which is not my
Mm,
normal go-to, but it was a gift as part of somebody stopped by, left off a case, so I'm trying it out.
runners get to drink beer, right? That's the whole payoff.
That's why I run. Yeah, yeah.
That's
I run so I don't keel over at this stand-up
you're an
desk.
addict.
Before 30.
You're,
What about your
cool. Yeah.
background, Shane? You've got a hell of a lot more experience than I do when it comes to taxes, and a lot more years
Well,
of
I would hope
doing
so as a
returns.
tax-focused CPA. Yeah, I spent my first, let's see, how old am I? 34. I got started at 23 in tax at PwC, and I've been pretty much focused on that since then. So that'll be I think this is my 12th tax season or 11th tax season now. And I was trying to do the math on that. If you do a few hundred returns per season, I think I'm over 5,000 returns at this
Nice,
point. Yeah.
nice. Wear like a
Um,
badge of honor.
it's not a badge of honor. Now, I had an attorney ask me for a second opinion on one of his other CPAs had said, "Hey, what do you think we should do here?" And typically, a CPA like provides links to articles and resources and whatnot. And all I said was, "Look, I've done 5,000 returns. You don't have to do that shit. Like, keep moving." And he was like, "That's it." I'm like, "That's it, man." And he's
That's
like, "All
it.
right, candid response." Like, it becomes, I think I've put my 10,000 hours in tax land. So I'm happy to move on to financial planning, but I am still the director of tax at Brooklyn FI. But I do have my roots in the tax space. And I also am very curious about the economics, and the how we fund our government element and the social science behind taxation of governments. Unlike companies, where there is competition and revenue, there is a profit at the end of the day. Governments, unfortunately, the revenue that they generate is in the form of taxation, and they often run at net losses like VC-backed firms. But eventually, a VC-backed firm has to turn a corner. And I think the only time that the U.S. government has turned a corner in terms of profitability was under Clinton. Was that right? At
Yeah, I
least
mean,
in
we
the
had a
last 100?
surplus. We had a budget
Mhm.
surplus, but we didn't wipe out the deficit. We didn't wipe out the
Oh
national
no, that's
debt,
never going to
I should
happen.
say. And so I think a lot of people get confused by that. Like, oh, like we've all this money, we just accumulate. Like, no, 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 no. Like, you had a bunch of credit card debt, you just didn't accumulate more for a couple of years in the mid '90s. Like, big whoop de fucking
hmm
do.
hmm Yeah, I had pulled up the stats on 2020's revenue versus expenses for the government in an effort to figure out
Not a pretty year
for
to
an
look
article.
at.
Yeah, it's messy. It's essentially for every $1 of revenue, there's $2 of expenses in 2020. I guess 2020 was a rough year though for income.
I mean, yeah, I mean the government spent a shit ton of money to prop up the economy
Right,
and
right, right.
make accountants' lives busier with PPP and all the other stuff, which is
Oh
probably a
my
reason why
fucking
we're going to
god.
talk about a bunch of the stuff in
I
here
didn't even
today.
put PPP stuff in here or EIDL stuff because it's not relevant to the IRS, but it was still fell on accountants' heads.
Mhm.
But let's take a look at this article. Let's get into one article to really discuss the woes of the IRS and how this is impacting the current year, tax year. To understand like what's going on with the IRS, I think a lot of taxpayers and people listening to this have understood that they're not excited about working with the IRS, and filing your taxes has been a pain in the ass since they were born. And it only has gotten worse. And it's gotten specifically worse over the past 10 years. So we have an article here from a government agency, the Center on Budget and Policy Priorities, It's called The Need to Rebuild the IRS. And there's essentially 5 sections here. We got the IRS resources are depleted. The IRS can't perform basic government functions. The amount of unpaid tax is large and growing. Focusing on low-income filers is unfair and inefficient. And finally, the IRS can be rebuilt. So we're going to talk about each one of these sections and talk about like what they mean by this, and just what our thoughts are on each of these sections. So, right off the rip, we're going to talk about how it's been a pain to deal with the IRS, mainly because government is wasteful, right or wrong?
Loaded question.
Loaded
But
question.
I mean, the tough part about it is, you do call up the IRS sometimes, and you'll get some like very skillful, smart, helpful people. It's just, do they have the resources, and are you putting the resources there? And this article kind of shows us that in 2010 they had 50,000 employees, and in 2021 they have 35,000. Like, how do you lose a third of your workforce when you were already? It's not like the IRS was like this super popular place in 2010. It's like, wow, they're known for their customer service and they get a bunch of JD Power awards. Like, no, they weren't. And then they've only
goes to the IRS.
yeah, and then they just lose staff and lose revenue and lose support. Doesn't really make a ton of sense.
Yeah, I mean, we got some numbers here. Funding is down 19% below where it was in 2010.
Yeah.
Wow.
And we know everything else is, cheaper than it was in 2010 too, right? The whole inflation thing we've got going on.
Yeah, I mean, that inflation is, I think this is adjusted for inflation. So, but the number is still down essentially 20%. And then on top of that, just having less money is going to make it more difficult to be good at your job. On top of that, if you've been given more responsibilities, I mean, everyone listening to this has received additional responsibilities without a pay raise, except for John Owens. We always give him a raise whenever we give him more responsibility. And we have a 7% increase in returns, in the returns that are filed. So that's just 7% more returns that need to be filed, all the correspondence that go out with them, the processing of them, the people that call in to get their questions answered, et cetera. We also have the IRS being responsible for more things when it comes to the government implementation of policies that Congress passes on to them, including the FATCA, the Foreign Reporting Act from back in 2010. I think it was 10, and maybe it was 12. Essentially,
don't forget Obamacare rolled out during this time, which was a huge thing on the IRS from a reporting perspective. We used to have the penalty if you didn't have health insurance. That was layered on top of this.
Yeah, I got a question today from a client that said, "Hey, I didn't have health insurance for 2 months out of 2021. Like, how is that going to impact my tax return?" And it was like, well, actually, that was something that was implemented under Obama, and then it was erased in 2017's tax overhaul, which is a massive tax overhaul that the IRS also had to implement in 2017. It was the biggest overhaul in 35 years. And then we also have the advanced child tax credit, which is new this year, which is checks that the IRS is writing to taxpayers. And also, let's not forget Trump bucks, aka stimulus bills, aka earned economic impact payments. There were 3 of those that went out that definitely floated everyone that didn't have a job during stimulus, during COVID, right? That $600 really kept us floating. Yeah, so essentially the IRS is just responsible for way more responsibilities, and they have less money to do it with, and they have less people to enforce that. So, I mean, I think one of the most interesting things about that is that there's all different types of people that work at the IRS, but specifically people that enforce the code, aka auditors. There's just less auditors. There's 40% fewer auditors than there were in 2010, putting us at levels equal to 1954. Why do we care about auditors specifically?
They're the people that are going to bring in the revenue. They're the people that are going to find the shit that the 1% did wrong, and catch them. That's important. It's like saying they're your enforcers for the IRS.
Yeah, and a lot of people listening to this might be saying, "Well, I've only got a W-2 and I got a 1099, maybe if I have investment income, and I'm lucky enough to have investment income showing up on my tax return, to have something scrolled away that generates income." So, how hard is that? Why do we need auditors for just W-2s and 1099s? Like, a computer can do that. Well, Not everyone has that.
Yeah.
Millionaires are usually business owners and entrepreneurs, and they self-report their income. And if there's anything that we know about human behavior, it's that if we have to harm ourselves by paying money into the IRS, and that's voluntary, do you think that we're going to get 100% compliance like Germans in jaywalking? I do not think so. So when you have less auditors, you have a lot less people. You have what's called a tax gap, and that's it's a jargon word for the amount of money that should be collected but isn't actually collected because of underreporting by people that don't know what they're doing on purpose or on accident, or are lying to the IRS on purpose. And that takes us to section 3 here of the amount of unpaid tax is already large and is growing. So the tax gap is another word for how much we were supposed to collect in taxes based on income that happened in the United States but was not collected for various reasons. And 80% of that is mostly due to underreporting, which is people not reporting what they should have, whether intentionally or accidentally. That number, 80%, or the amount of the underreporting, is $580 billion
It's
a
crazy.
year. A year. So I wanted to compare that to, our overall revenue is $3.5 trillion for the year. So those are big numbers. So let me do the math for you. That's 15% of our revenue that should have been collected is not. Okay, every year due to the IRS's underfunding. How many companies do you think collect less than 15% or 15% less than they should have and do a good job at it?
Yeah, none that aren't being taken over by some activist investor. That's for damn sure.
Yeah, yeah. So, that's a problem, and that goes to our next point here, which is focusing on low-income filers. It's just where the auditors seem to be focusing on, is on low-income filers, and that's inefficient and it doesn't generate the revenue. So, like, if you are working in a sales department at a company, would you prefer to, if it's the same amount of effort, would you focus on, I'm not sorry, not the same amount of effort, but if there was a lot bigger bang for your buck on higher income contracts, let's say big juicy contracts that you can land on big businesses that are willing to buy your products versus small mom and pop businesses that have a smaller budget, and the cost benefit is much higher on the large companies when you focus on them, right? Well,
You think.
you would think,
But I mean, I think the thing,
unfortunately.
Shane, here that's interesting about this is that they used to in 2010 they audited the top 1% at about a 5% audit rate. The folks who receive the earned income tax credit, which is who we're talking about here, some of the lowest earners, but earned income tax credit means I have earned income. I'm working and I get a tax credit because I'm working in a lower wage job, and typically because I have dependents. Okay, 2.5% for earned income tax credit, folks. 5% for higher earners. Now it's 1.5% for both, and so there's been a change in reduction, but it's been much more drastic for the top 1% of taxpayers. And classic example of like this doesn't make a ton of sense. Don't get me wrong. I don't like tax cheats regardless of what their income is.
Hmm.
Okay.
Hmm.
We need to enforce this. It needs to be accurate and all that. That's really important. I think that's something that us as tax professionals take very seriously. But for crying out loud, like, where's the bang for your buck?
Yeah, I mean, audit rates for millionaires is down 71%, which to me that's just such a reflection of the last 10 years in America and the growing wealth gap and the politics that have driven policies that we see in America, just driving me nuts. But the other thing that, is this especially hits home for me because I've worked in an earned income tax credit focused tax firm before,
Mm-hmm.
where you've got people that have made maybe $20,000 and they've got 3 kids, and come tax time, they line up around the block, and they're mostly, in my experience, people of color, and they come in and they might get tax refunds for $10,000. The IRS actually pays out of pocket to help them and their families survive because they have earned 20,000, but they're not making ends meet to
Mm-hmm.
feed their families, so they need help from the government. And these are the people that get audited at the same rate as multimillionaires or people that are making millions of dollars in income alone, let alone who
Mm-hmm.
knows what their actual net worth is, on top of the income that they just made that year. And frankly, people that have the ability to earn $1 million in a year probably have very high net worths to begin with as well, so they can hire the people to help them with audit should they happen. Whereas, if the IRS sends you a letter that says, "Hey, we need your social security card for this kid that you put on your earned income tax credit tax return," and you can't get to a copy machine, or the letter goes to a house that you used to live at and you didn't set up mail forwarding because the budget for local communities and resources in your post office, and it's hard to navigate all that system, like it's just frankly harder for people to
Yeah.
respond to the notices as well. I think we understand the problems going on here. And before I start crying on the podcast, I'm going to move on to our next article here, which is what's it like working at the IRS, John? There's a Reddit thread here.
Yeah. I mean, it sounds like a pretty nice job, 40 hours a week. You're probably going to take a big pay cut if you're leaving the world of public accounting, but you're going to get some nice government benefits. You're not going to be stressed out nearly as much as you are in those other roles. And so actually doesn't sound like that bad. It's got to hop on my LinkedIn here a second, Shane. I will be back. But yeah, I mean, I think, and if you want to watch a movie about it, what it's like to work at the IRS, I highly recommend watching Stranger Than Fiction, which is one of my tax season favorites. That's where Will Ferrell is working at the IRS in that movie. Great film.
Will Ferrell is an IRS agent that talks to himself. Underrated movie for sure. What is another IRS? Oh yeah. In movies, we've got Stranger Than Fiction. In book and literature, we've got David Foster Wallace's The Pale King, are the only two IRS media items that I'm familiar with that are actually enjoyable related to IRS work.
Yeah.
But this, we have this article here. And around this time, I watch Tax Pros on Reddit, and I watch people like the complaints and on the boards just go wild this time of the year, because this is typically, if you work in public accounting, you are paid to work 70 hours a week for a few months, and then the summer is supposed to be chill, and the off season is supposed to be pretty low key. But they typically end up working between 2,000 and 20. It depends on where you work, but up to 3,000 hours per year. And this is the worst time of the year to be an accountant. So I saw this. There's article. There's posts like this. Like, has anyone ever left public accounting to go work for the IRS, and what is that like? And this guy responds that he's got 18 years with the IRS after 10 years in public, and he just says best job ever. The work-life balance is unparalleled. Many people take pay cuts up to $100,000 just to work here, but don't know anyone who has left and gone back to public or for more money. So if you're listening,
I mean, that's pretty telling. That's pretty telling about the quality of life there. I mean, if I go work for the IRS, though, Shane, I'm going to go be a revenue agent. I want to go.
Oh, yeah?
I want the vest. I want the gun. I want the badge.
Criminal enforcement.
Yeah, exactly. Like, want to be like taking down some like Narcos type thing or something like that. Like, come on. I'm not going to go work for the IRS to sit at their desk with 4 monitors like I do right now. Like, I'm gonna be out there.
You would die to be able to carry a gun on the clock.
I'm actually most excited about the windbreaker, but yeah.
So you get to use your half marathon skills to run up on a narco and
Exactly. I got a funny IRS story. I learned about this when I was studying for the CFP, but an IRS, revenue agent showed up at somebody's house saying, "Hey, like you took a home office deduction. And we have the authority to come here and make sure that you actually do have a home office, and I think they probably thought this guy was up to some other things. And so the guy says to the IRS agent, "That's fine, but you don't have any reason to see anything else in my house. So I'm going to put a blindfold on you, and then I'll take it off when we get to the office and you can see that. And then I'm going to put it back on and you can walk out." And the agent did it. He went into the house. Okay, I would have been like, "No thanks, I'm out. Like, this is how I disappear forever, and you will never find me again." But yeah, the guy did it, which is like one of the craziest things I've ever heard. And like, you got to be, just take a special kind of person.
Yeah, for sure. Knocking on someone's door, asking to go in their house, and then they put a blindfold on you. No thanks. I think I'm good on that. Yeah. Smells like
murder.
So we've talked about our backgrounds. We've talked about the IRS's woes. One of the woes that we skipped over is that 4 out of 5 phone calls don't get answered at the IRS when people call in to try to get some help.
You can say the same thing about my cell phone, probably, but
So what kind of issues is Brooklyn FI seeing specifically regarding issues with the IRS? And really, this might even be more specific to this other article about the accountant shortage and resignations. The Great Resignation has hit the accounting industry just like it has hit every other industry.
Yeah.
And there's apparently 17% less accountants out there working.
Hmm.
In general, which means
Yeah.
that the people that produce the W-2s that go to the IRS, there's 20% less of them. So that's only going to spell trouble. Same with the 1099. Same with the equity plans that that get put together by our clients. Those are accountants that just work in private industry that put together those tax documents that go to the IRS and then go to you.
And I think,
So,
Shane, it's like a three-pronged problem that I see here. And like one is like there's just not enough talent in the accounting space. The IRS is underfunded, okay? And then you have this other issue of like more companies went public or SPAC last year than
mhm.
many other places. So you've got all these companies that are growing up that haven't had to be public companies, that haven't had to do some of the tax reporting associated with all this stuff. And there's this huge influx of them. And so when you throw all those things together, it kind of means a hellish experience for employees at many of those companies, for us as some of their tax professionals, because we're finding some pretty drastic errors on documents that you would kind of take as gospel from your employee. Like, oh, they send this to the IRS, like it's probably fucking right. No, not necessarily.
One of our financial planners pinged me, who I hope I get to see this weekend. She pinged me and she said, "Hey, can you take a look at this W-2 with me? I have a feeling it's wrong." And we went and did some sleuthing that we do here. That's our bread and butter at Brooklyn FI. And yeah, it was wrong. It was wrong by $1.7 million in our
Mm.
client's favor. So we sent an email to payroll at, I won't name any names, and yeah, they sent us another W-2, which was also wrong. So we had to amend
Ooh.
that one as well, and the saga continues.
I wish my W
Um,
two was off by 1.5 million. I'll take it.
yeah, yeah, I hear you, buddy. We'll get you there. We'll get you there. And then we have another client that sent us a notice that they got from the IRS, which is always like
This is
a
great. I was
fireworks
losing
moment.
it this morning when I read this.
Oh my God. Hey, IRS notice. And all it says is, we lost your amended return. We know that you sent us
Sent
a
it.
return in. We just don't have it anymore. We have no idea what
The
happened
dog
to
ate my homework.
it. There's another article in here that we skipped over about how the IRS is 25 million returns behind already this tax season.
Do you ever feel that way, Shane? Is there like a point in March where you feel like your 25
25
million
million.
returns behind?
I think, yeah, people ask me at the bar, I'm like, I think we're like 25 million behind, something like that. But we're going to make it. We got a few
Yeah,
weeks
yeah, like
left.
we'll get it done. It's the deadline's April 18th this year, not April 15th. So like if you factor in Easter weekend, we'll be fine. I'll be okay.
Yeah.
So
We always get it done. That's tax teams at every public accounting firm everywhere I've ever worked have always said it somehow it gets done. No matter
somehow
what,
it gets done.
it gets done. Which is true. What else have we seen? We've seen just frankly incorrect, just other types of documents that have just been way over the top incorrect. Incentive stock option exercises that were wrong.
Also like just slowness in getting notices. So like most of the time, so like if we file your 2021, let's say we filed your 2020 return in April of 2021, normally, it's like the next summer where you're getting a notice. Well, it's taking even longer for these notices to go out to folks. And so, you might be two accountants removed by the time you get your tax notice, which is something we see with clients that show up here that like, oh, well, we didn't mess up this return. Somebody you worked with 3.5 years ago did. And it's taking some time to get that sorted out and to get caught.
Yeah, I mean, speaking of time to get sorted out, one of our tax managers, we have a special hotline that we call into the IRS, and he sent me a screenshot of how long it took to get a hold of them, and it was, I'm going to round up 15 minutes. It was 4 hours he had to wait on the like. We have to talk to the IRS. It's not like we have a choice. If they don't answer the phone or if we don't call in, they charge penalties and interest. And those penalties can often be, those are a percentage of the tax that is incorrect or underpaid. So you have someone that owes $100,000, they can end up with a $25,000 penalty. And Brooklyn FI can't afford to swallow those penalties for our
Mm-hmm.
clients. So it takes, 4 hours to get through to the IRS. It's terrible.
Yeah.
Let's see. We got a minute left. You want to cover anything else? Or we got this Trump thing. We got to sprinkle in some Trump?
Trump's accounting firm fired him. Shocking. The American people fired him a year ago. Now his accounting firm fired him. No surprise there. Yeah. I mean, I think the other thing not tax related is we are seeing market volatility We are seeing, these fun trading windows going on right now. And
Hmm.
so got some fresh content on the Brooklyn FI blog about being resilient and kind of trying to stick to the plan and maintain perspective because, you know, who knows what lies ahead? Who knows where tech stocks are going to go? Kind of timely topic for this and just kind of sprinkling it in, but something just to be mindful of. We're seeing it a lot.
Yeah. Yeah. Good point. It's not all taxes.
Thankfully.
Thank God. All right. Thanks everyone for listening to our tax update for 2022. You can email us at liquidityevent@brooklynfi.com if you've got any tax or other questions. We will discuss on the air. You can also leave us a voicemail at podinbox.com/the liquidity event. You can find the show notes at brooklynfi.com/episode 31. BKFI stands can leave us a review if they want to be weird about it. Thanks everybody.
See ya.